Imagine if just 3 companies could unlock massive long-term wealth in your portfolio. In today's volatile market, finding the right growth stocks is more crucial than ever. We're not talking about hype or get-rich-quick schemes. These are fundamentally strong businesses poised for explosive growth over the next decade. Today I'll break down a social media and metaverse leader, a biotech pioneer changing lives, and an e-commerce and cloud giant dominating a massive market. Each has a unique story, incredible potential, and a clear path to continued dominance. This isn't just another stock-picking video, it's a blueprint for identifying high-conviction long-term winners. I've done the research and crunched the numbers, so stick around for the detailed breakdown of my top 3 picks for serious growth. Hit like, share your thoughts in the comments, and subscribe so you don't miss the next big investing update. This video is sponsored by Value Stocks Investing Master Course. If you're looking to grow your wealth by investing in solid, undervalued stocks, but not sure where to start, I created the Value Stocks Investing Master Course to teach you how to identify great companies, make smart investment decisions, and build a portfolio that lasts. Click the link in the description and pinned comments to get the course today and take control of your financial future. Let's start with Meta Platforms. Yes, the company behind Facebook, Instagram, WhatsApp, and Messenger. These aren't just apps. They're the digital infrastructure of our daily lives, connecting friends, families, and businesses across continents. Meta's reach is so vast that it's hard to imagine a world without its platforms shaping how we communicate, share, and even do business. Meta's family of apps is a global digital nation with billions of daily users and an advertising business that's a cash printing machine. Every day, people from every corner of the globe log in to connect, discover, and engage, making Meta's platforms a central hub for digital interaction. The sheer scale of its user base gives Meta a unique advantage, one that few companies in history have ever achieved. Advertisers flock to Meta for its unmatched reach and targeting, fueling a core business that's still growing and highly profitable. With sophisticated data analytics and AI-driven insights, Meta enables brands to reach the right audience at the right time, maximizing the impact of every advertising dollar. This advertising engine is the backbone of Meta's financial strength, generating massive revenue streams year after year. But Meta isn't just about social media. The real long-term story is its bold bet on the metaverse, investing billions through Reality Labs to build the next generation of digital interaction. This isn't just a side project, it's a moonshot vision to redefine how we experience the internet, blending virtual and physical worlds in ways we're only beginning to imagine. Think of Meta as building the operating system for the future, hardware, software, and ecosystem. From cutting-edge VR headsets to immersive digital environments, Meta is laying the groundwork for a new era of computing. If the metaverse succeeds, Meta could become as essential to tomorrow's digital world as Microsoft or Apple are today. While the market once punished Meta for its metaverse spending, Zuckerberg's pivot to efficiency and cost-cutting has reignited investor confidence. By streamlining operations and focusing on profitability, Meta has shown it can adapt quickly to changing market conditions, balancing visionary investments with financial discipline. Now, Meta boasts a leaner operation, robust free cash flow, and even a dividend, signaling maturity and strength. This is a company that's not just growing but evolving, rewarding shareholders while still investing in the future. The introduction of a dividend is a major milestone, reflecting Meta's confidence in its long-term cash generation. You're essentially getting 2 companies, today's dominant social media giant and a call option on tomorrow's metaverse leader. It's a rare combination, a business with proven, reliable profits and a high upside bet on a transformative new technology. For investors, that's a compelling mix of stability and potential. Even if the metaverse takes time, Meta's core business remains a powerhouse. The company's platforms are deeply embedded in the fabric of modern society, ensuring a steady stream of revenue and relevance for years to come. This gives Meta the luxury of patience as it builds the future. Valuation is still reasonable compared to other tech giants, especially given Meta's growth and margin improvements. Despite its dominance, Meta trades at a discount to some peers, offering investors a chance to own a world-class business at an attractive price. As margins expand and growth continues, there's room for further upside. AI is now supercharging every part of Meta's business, from ad targeting to new features, unlocking even more potential. The company's investment in artificial intelligence is driving innovation, making its platforms smarter, more engaging, and more effective for users and advertisers alike. AI is not just a buzzword at Meta, it's a core driver of future growth. International growth is a huge runway with billions in developing markets just coming online, especially via WhatsApp. As internet access expands in Asia, Africa, and Latin America, Meta is perfectly positioned to capture the next wave of digital users. These regions represent untapped potential that could fuel Meta's growth for the next decade and beyond. Meta's history of smart acquisitions and its massive cash pile give it flexibility to innovate or acquire new growth. The company has a proven track record of spotting trends early, like buying Instagram and WhatsApp, and has the resources to make bold moves when opportunities arise. This strategic agility is a key advantage in the fast-moving tech world. Competition is fierce, but Meta's ability to adapt, like launching Reels to counter TikTok, shows its resilience. The company doesn't just rest on its laurels, it actively evolves to meet new challenges, keeping its platforms relevant and engaging for users of all ages. Financially, Meta's balance sheet is pristine, with more cash than debt and the ability to weather downturns or invest aggressively. This financial strength provides a safety net, allowing Meta to pursue ambitious projects without jeopardizing its core business. Mark Zuckerberg's founder-led vision and willingness to make bold bets set Meta apart from most tech companies. His long-term focus and commitment to innovation have driven Meta's evolution from a college social network to a global technology powerhouse. With a staggering market cap of $1.78 trillion, Meta continues to prove it's more than just a social media giant. In 2024, the company reported revenue of $164.5 billion, powered by its strong advertising business and growing investments in AI and the metaverse. Its net income for the year came in at an impressive $62.36 billion, reflecting both operational efficiency and strategic growth. With an earnings per share of $26.32 and a P/E ratio of 26.76, Meta maintains a solid valuation in line with investor expectations for future expansion. In summary, Meta is a dominant cash-rich business with a powerful network effect, a massive metaverse bet, and a strong AI catalyst. Its platforms connect billions, its financials are rock solid, and its ambitions reach far beyond today's internet. This is a stock for long-term investors who see where the world is heading, not for short-term traders. If you believe in the future of digital connectivity, immersive technology, and global expansion, Meta offers a front-row seat to the next chapter of the internet. The market often misprices companies in transition. Meta was punished for its vision, but now it's being rewarded for execution. As the company delivers on its promises, investor sentiment is shifting, and the stock is reflecting renewed optimism. Look past the noise. Focus on fundamentals and the long-term vision. Meta's story is about more than quarterly earnings. It's about shaping the digital landscape for decades to come. Meta is actively building the future, not just resting on its laurels. Every day its teams are pushing boundaries in AI, virtual reality, and global connectivity, ensuring the company stays at the forefront of innovation. For those with patience, Meta Platforms is one of the best growth opportunities in the market today. It's a rare blend of current profitability and future potential, making it a cornerstone for any forward-thinking investor. The upside is significant and the risk-reward profile is compelling. With its dominant position, innovative drive, and global reach, Meta is poised to benefit from the biggest trends shaping our digital future. That's why Meta deserves a spot in any serious long-term portfolio. It's not just a bet on social media, it's a stake in the evolution of how we live, work, and connect. Let's move to our next pick. Next up, let's talk about Vertex Pharmaceuticals, ticker symbol VRTX, a true pioneer in the biotech world. This isn't just a company that's improving lives, it's one that's fundamentally changing the course of medicine, and in many cases, saving lives outright. Vertex has become synonymous with innovation, resilience, and hope for patients with some of the world's most challenging diseases. Vertex dominates the cystic fibrosis market, a space where it has transformed what was once a devastating, often fatal diagnosis into a manageable, chronic condition for the vast majority of patients. Thanks to Vertex's groundbreaking therapies, children who once faced a lifetime of hospital visits and uncertainty can now look forward to longer, healthier lives. Families are given hope, and patients are empowered to live more fully. This dominance in cystic fibrosis provides Vertex with a rock-solid foundation, delivering stable, predictable revenue streams and industry-leading profit margins. The company's financials are the envy of the biotech sector, with consistent growth and a business model that's both resilient and scalable. Investors can count on Vertex's CF franchise as a reliable engine that powers the company's ambitious research and development efforts. But Vertex isn't a one-trick pony, far from it. The company's pipeline is packed with innovative therapies targeting a range of rare genetic diseases and other high-impact conditions. Vertex's scientists are pushing the boundaries of what's possible, exploring new frontiers in gene editing, cell therapy, and precision medicine. Their relentless pursuit of cures means the company is always on the cutting edge of biotech innovation. The recent FDA approval of 𝗗𝗚, the world's first CRISPR-based gene editing therapy, is nothing short of a game-changer. This breakthrough opens up entirely new markets in sickle cell disease and beta thalassemia, two conditions that have long lacked effective, lasting treatments. 𝗗𝗚's approval is a testament to Vertex's leadership in gene editing and its ability to turn cutting-edge science into real-world solutions for patients. Vertex's success in gene editing doesn't just validate its R&D strategy, it also de-risks the entire pipeline. With this regulatory win, Vertex has proven it can navigate the complex path from discovery to approval, giving investors confidence that future therapies in its pipeline have a higher chance of success. This achievement also positions Vertex as a leader in the next wave of genetic medicine. The company isn't stopping there. Vertex is developing a non-opioid pain medication that could become a blockbuster, addressing the urgent need for safer pain management options amid the opioid crisis. In addition, Vertex is working on potential cures for type 1 diabetes and rare kidney diseases, areas with huge unmet medical needs and multi-billion-dollar market opportunities. These programs could redefine standards of care and open up new revenue streams. This diversified pipeline means Vertex has multiple shots on goal, each with the potential to unlock massive new markets. The company's approach isn't just about incremental improvements, it's about delivering transformative therapies that can change the trajectory of entire diseases. With each new program, Vertex is building a future where more and more conditions can be treated at their genetic root. Vertex's financial strength is a major asset. With billions in cash on hand and zero debt, the company has the resources to fund its ambitious R&D agenda, weather industry setbacks, and seize new opportunities as they arise. This fortress balance sheet gives Vertex the flexibility to invest in innovation without compromising its financial health. At the helm is a management team led by a physician-scientist CEO, whose deep understanding of both medicine and business ensures that every decision is grounded in long-term value creation. This leadership team is laser-focused on smart capital allocation, strategic partnerships, and building sustainable growth for years to come. Vertex's competitive moat in cystic fibrosis is massive, with a near-monopoly position that's protected by years of research, intellectual property, and patient trust. But the company isn't resting on its laurels. It's actively building new moats in gene editing, pain management, and other high-barrier fields, ensuring its leadership for the next generation of biotech breakthroughs. Of course, regulatory risks are always present in biotech, but Vertex's track record with the FDA is among the best in the industry. The company often benefits from priority reviews and accelerated pathways, thanks to the life-changing nature of its therapies and its strong relationships with regulators. Demographic trends are also on Vertex's side. As the global population ages and chronic diseases become more prevalent, the demand for innovative, effective treatments will only continue to rise. Vertex is well-positioned to meet these needs, both now and in the future. Vertex offers a rare blend of stability and explosive growth. Its cystic fibrosis franchise provides a strong, stable base, while its pipeline offers the potential for exponential upside. This combination is incredibly rare in biotech, making Vertex a standout choice for investors seeking both security and growth. This isn't a stock to trade in and out of. It's a company to own for the long haul, to let the science, the innovation, and the compounding value work in your favor over time. Patient investors could be handsomely rewarded as Vertex's breakthroughs move from the lab to the clinic and ultimately to patients around the world. The market is starting to recognize Vertex's enormous potential, but the full value of its pipeline is still not fully reflected in the stock price. As more therapies gain approval and reach patients, there's significant room for upside. Approval of its non-opioid pain drug or further gene editing breakthroughs could dramatically re-rate the stock, sending shares soaring and cementing Vertex's status as a biotech powerhouse. Vertex Pharmaceuticals is holding strong with a market cap of $118.13 billion. Known for its groundbreaking work in genetic therapies, particularly in cystic fibrosis treatment, Vertex posted revenues of $11.02 billion in 2024. However, the company reported a net loss of $535.6 million for the year. While that may raise some eyebrows, it's not uncommon for biotech firms navigating the expensive and complex drug development pipeline. Investors will be watching closely to see how Vertex maneuvers its R&D investments into long-term profitability. For long-term investors, Vertex represents a rare opportunity, a pioneer with the potential for outsized returns, driven by science, innovation, and a relentless commitment to curing the incurable. Investing in Vertex is more than just a financial decision. It's a vote of confidence in the future of medicine and the power of human ingenuity to solve our toughest health challenges. If you're looking for a core growth holding in the biotech sector, Vertex is hard to beat. Its track record, pipeline, and financial strength make it a cornerstone for any forward-thinking portfolio. The upside is immense, with multiple shots at breakthrough therapies, while the downside is cushioned by its dominant cystic fibrosis business and fortress balance sheet. That's why Vertex is my top biotech pick for the next decade, a company that's not just leading the industry, but redefining what's possible in medicine. Now let's head east for our final stock, as we continue our search for the world's most compelling investment opportunities. Here's the e-commerce giant you can't ignore. Let's dive in. Our third pick is Alibaba, ticker BABA, the tech giant at the heart of China's digital economy. Founded by Jack Ma in 1999, Alibaba has grown from a small startup in Hangzhou to a global powerhouse, shaping the way hundreds of millions of people shop, pay, and do business online. Alibaba is more than the Amazon of China. It's an ecosystem combining e-commerce, cloud computing, logistics, digital media, and fintech. The company's reach extends far beyond online shopping, touching nearly every aspect of the digital economy in China and increasingly, the world. Its core platforms, Taobao and Tmall, are the go-to for over 1 billion Chinese consumers, creating a network effect that's nearly impossible to replicate. These platforms are deeply embedded in daily life, from buying groceries to luxury goods, and their influence only continues to grow as more people come online. E-commerce is the cash cow, but Alibaba Cloud is the high-growth engine, poised to benefit as China digitizes. As businesses and government agencies move their operations online, Alibaba Cloud is becoming the backbone of China's digital infrastructure, powering everything from small startups to massive enterprises. The cloud business is nearing consistent profitability, and at current valuations, investors are getting it almost for free. This means that the market is so focused on short-term risks, it's overlooking the long-term value of Alibaba's cloud and technology assets. Alibaba also owns 𝗗𝗟𝗡𝗧 Logistics, a digital media group, and a stake in Ant Group, making it a diversified tech powerhouse. 𝗗𝗟𝗡𝗧 is revolutionizing logistics with automation and AI, while Ant Group's Alipay is a dominant force in digital payments, serving hundreds of millions of users. So why is the stock so cheap? Sentiment. Regulatory crackdowns, geopolitical tensions, and a slowing economy have hammered the price. Investors have been spooked by headlines, but often the best opportunities arise when fear is at its peak. But the regulatory environment is stabilizing, and the Chinese government is signaling support for its tech champions. Recent policy shifts suggest a more predictable landscape, and Beijing recognizes the importance of companies like Alibaba in driving innovation and economic growth. Alibaba is trading at a single-digit forward PE, an absurd discount for a company with dominant market positions and growth engines. Compared to global peers, Alibaba's valuation looks like a bargain, especially given its scale and profitability. Management knows the stock is undervalued. They're aggressively buying back shares and have a fortress balance sheet. This buyback program is one of the largest in Asia, signaling confidence in the company's future and a commitment to returning value to shareholders. A recent restructuring split Alibaba into 6 business units, unlocking value and setting the stage for potential IPOs. Each unit can now operate more independently, pursue its own growth strategy, and attract outside investment, which could further boost Alibaba's overall valuation. Leadership changes have refocused the company on core e-commerce and cloud, with renewed energy and accountability. The new management team is prioritizing innovation, efficiency, and customer experience, aiming to keep Alibaba at the forefront of China's tech landscape. Investing in Alibaba requires a contrarian mindset, but the risks are well known and likely over-discounted. For those willing to look past the noise, the company's fundamentals remain strong, and the potential rewards could be significant. The upside? If sentiment improves or restructuring unlocks value, the stock could double and still be cheap. Even a modest shift in investor perception could lead to outsized gains, given how far the stock has fallen from its highs. China's rising middle class and ongoing digital transformation mean long-term growth for Alibaba's core businesses. As disposable incomes rise and digital adoption accelerates, Alibaba is perfectly positioned to capture this wave of consumer spending and innovation. Alibaba is a national champion, too important to the Chinese economy to be ignored. Its platforms support millions of small businesses, create jobs, and drive technological progress, making it a key pillar of China's future. Volatility will remain, but the risk-reward is asymmetric. Limited downside, substantial upside. For investors with patience and conviction, the current uncertainty could be a rare opportunity to buy a world-class business at a deep discount. The company boasts a market cap of $292.24 billion and delivered a jaw-dropping $996.35 billion in revenue for 2024. Even more eye-catching is its net income, $130.11 billion, underscoring just how massive Alibaba's footprint has become across e-commerce, cloud computing, and digital finance. With an earnings per share of $55.20 and a PE ratio of just 2.18, Alibaba appears deeply undervalued by traditional metrics, likely reflecting market concerns around regulatory risks and the broader Chinese economy. Still, these numbers suggest substantial potential for long-term investors looking beyond the short-term noise. For patient investors, Alibaba is a value play with powerful growth potential. The company's ability to adapt, innovate, and expand into new markets makes it a compelling long-term holding. It's a bet on the Chinese consumer and the future of digital commerce in the world's largest market. As e-commerce penetration deepens and new business models emerge, Alibaba stands to benefit from every stage of China's digital evolution. If you can stomach the headlines, Alibaba could be a portfolio game-changer over the next decade. The key is to focus on fundamentals, not fear, and to recognize the difference between temporary setbacks and lasting value. The time of maximum pessimism is often the best time to buy. History shows that great companies often deliver their best returns when investor sentiment is at its lowest. That's why Alibaba is my top international growth pick. It's a rare combination of scale, innovation, and value, with the potential to reward patient investors handsomely. Let's wrap up with your blueprint for long-term wealth. Building a portfolio with global leaders like Alibaba can help you capture growth beyond your home market and diversify your investment strategy. Here's how to put it all together. Stay tuned for the next steps in your journey to building lasting wealth and making smart, global investment decisions. There you have it. Meta, Vertex, and Alibaba, three dominant companies with clear paths to long-term growth. Together, these companies highlight the diverse strategies and market dynamics driving today's global financial landscape. From tech titans scaling AI innovation to biotech pioneers navigating future medicine, and e-commerce powerhouses reshaping global trade. Building real wealth isn't about timing the market, but owning world-class businesses for the long run. If you want to level up your investing, check out my Value Stocks Investing Master Course, link in the description. For exclusive stock tips and in-depth analysis, join the Stocks Galore Patreon community. Now I want to hear from you. Which of these three stocks are you most bullish on for the next 10 years and why? Drop your pick in the comments. Don't forget to like, share, and subscribe for more investing insights. Thanks for watching, and I'll see you in the next one. Stay smart, stay invested.